Overall, I'm positive actually. We had a bit of a slowdown at the start of the year with the Omicron wave still having its effect, but we're now expecting the European Economic Area to stabilize to above trend growth. We actually are seeing, after the 5% growth that was achieved last year, to see about 4% growth this year and around about 3% next year, which is a good performance that's underpinned by an increase in consumption and has also come in tandem with a reduction in unemployment. Clearly, there will be a little bit of wage pressure building up around that, but overall we see the inflation picture as manageable, and indeed see core inflation at around 2% by the end of the year, which should mean that a tightening cycle ought to begin in 2023 towards the end of that year. So overall, we're feeling like we're coming out of the pandemic and the macroeconomic environment, whilst it is subject to risks, is being managed in a controlled and judicious way. Some of the exogenous risks that surround us, of course, are areas like the tensions on a geopolitical level. And of course, there is a degree of uncertainty around some of the political processes that we have ongoing in Europe. But absent any downside from those exogenous circumstances, I think the weather is set fair. Well, clearly, the investment needs in Europe are huge. So when we think about the 330 billion that have been estimated to be needed till 2030 to finance the climate transition in the EU, or indeed the 125 billion roughly required to finance the digital transition, these are big numbers. And while we do have a very large stock of savings in Europe, we need to be able to channel those savings into financing those transition needs. And for that, we do need strong capital markets, and we ultimately need to see a greater vision develop around what capital markets could be. I've expressed my own views on what that could look like. There's no right answer. There could be a different vision that ultimately encompasses the makings of a solution for a unified set of capital markets that will indeed allow those savings to be brought to bear. I think it's important when we think about this that we don't disregard the need for some political impetus around this. When we saw the creation of a European Monetary Union, that was something that carried a huge amount of support from the member states. And something like a capital markets union really has to begin with perhaps more of a vision and building political consensus behind it, as opposed to looking at doing what is doable and believing that that alone is going to lead to a set of unified capital markets. The other thing that we really need to do is probably to create greater incentives to allow investment to flow between countries. So the type of tax environment that we see in one country may not be conducive for those savings to be channeled in a place where greater investment is needed within the EU. And equally, we need to see greater incentives towards building an equity culture where savings are less placed in traditional products, but the more so in securities, and more specifically equity securities, as opposed to continuing to rely almost exclusively on banks to provide financing for the development of enterprise and the development of the infrastructure that is necessary. We've taken a big step, obviously, with the Next Generation EU, where supranational authorities have stepped in the context of a crisis to support that development and indeed that transition, as milestones are key to that program and to the disbursements under that program. But I think on all these fronts, I believe we could see more. Clearly, we do have the challenges that I mentioned earlier around investment needs. Clearly, there is a conceivable scenario where we need to continue to rely on flows of investment funds from abroad as well. And so we do need to create an attractive environment for investment funds to flow into. And from my perspective, that needs to be a relatively transparent, open, and accessible environment, as opposed to one that is beset by artificial barriers. Ultimately, the Capital Markets Union that I was mentioning earlier is something that needs to be embraced as a project, and I think needs to be intrinsic to the question around strategic autonomy, because clearly, with a more unified capital market, it will have the depth and the opportunity to attract the required investment funds. A very smart person once told me, we can appoint you to a position, but ultimately you need to get elected. So similarly here, for strategic autonomy, for autonomy to really work, we need to see a capital market develop that benefits from the voluntary actions of investment participants, investment actors, and for that, it clearly requires that type of infrastructure that we were talking about, and for it to be supported by regulation as opposed to having been solely created through regulatory or legislative efforts. And I think that's ultimately the combination that we should be looking for in terms of developing a long-term strategic autonomy type concept, because if we do that, then we will be able to develop the ability to finance our own investment needs, but also be able to draw on foreign funds to do so.